Hey everybody, welcome to today's session. In today's session, we're going to go over the currency pairs or the pre-market analysis for the coming week, what we're anticipating to happen, the pairs that are on my watch list, how last week has ended, and how we should be anticipating to see markets play out during the coming week. So if that sounds interesting, please do stick with us until the end, and let's get it. All right, so we're going to start off with JPYX. With JPYX, last week you can see prices closed with a lack of momentum after hitting this market structure here, which is 0.5 Fibonacci key level, and the market structure, that's a support structure, being rejected there and closing with a doji, indicating a lack of momentum, obviously. So after a bearish run and then the market presents a lack of momentum, obviously we understand like prices have a big possibility of going in the opposite direction. And with this instance, it's a buy move, right? As you can see here, the structure was actually broken. This was the most recent high. Prices broke above that. And this was the most recent low. Prices have created a higher low. So obviously the trend is now bullish, and we should be anticipating to see prices push. This being the first target, obviously, because you can see the prices have created this kind of a descending trend line. And we have a market resistance here, right? So this should be our first targets with JPYX. Obviously, from here, once prices break above that, we can see on the left-hand side, we have a clean slate, no resistance whatsoever. So we should be seeing prices, push higher. Excuse me. We should be seeing prices push higher, maybe give us a retest and then continue going higher. But that will only happen, or we should be anticipating this only after prices have broken above here. We shouldn't take a trade and say we're going to swing with it all the way until up here. Nah, that's too risky. And the trend here, if we look at it like the bigger picture trend, we can obviously see it's still a very big downtrend, right? It's still a very big downtrend. Like prices are just pushing lower, right? So if we say we're going to swing with it all the way out here, like the Hail Mary, nah, that's too bad. The odds are against us if we say we're going to swing until there. But if we take a trade until here, that's more guaranteed, right? That's more guaranteed. So we're going to take a trade here, watch it move all the way until there, and then look at the momentum. If the momentum is still strongly bullish, then we can anticipate to see prices break above that, perhaps give us a retest before it continues. If not, oh well, it is what it is. But the first targets will be here, and that's what we'll be aiming for. So let's look at the JPY pairs that are actually aligning with this bias. We got USD JPY. Obviously, we understand that USD JPY is inversely correlated to the JPYX. So yeah. So if we see the JPYX going higher, we'll be anticipating to see the USD JPY going lower, right? So obviously, these will be the first targets with USD JPY. Prices pushing lower until here. As I said, just as with the JPYX, once prices reach here, we'll then look at the momentum. If it's still strong, prices break below, then we can actually be aiming for these lows. But until then, this will be our first target, right? And it's a decent trade. It's about over 800 pips. Look at that. Over 800 pips. That's a lot of sauce. That's a lot of sauce. So obviously, we can see last week prices reached there on this support structure and resistance structure. As you can see how it reacted in the past. And it's also a 0.38 Fibonacci key level, right? So this coming week, we should be anticipating to see prices, the bears take over and push lower on the USD JPY. We got CHF JPY, inversely correlated to the JPYX. We can see here last week prices closed with a lack of momentum after reaching somewhere up here, right? So again, with the same as the US dollar, with the USD JPY, this will be anticipating it to go lower because it's inversely correlated to the JPYX, right? So prices, we should be anticipating them to go lower like that, right? So cool. All right. That's what I'm anticipating with CHF JPY. Euro JPY, prices have just reached this kind of sensitive area up here. If we switch it on the daily, You can see the zone that it's at. And it's indicating kind of rejections, trying to push lower. But with the Euro JPY, I really wouldn't put my focus on it. It's a great pair. It's our best performing pair, to be honest. But I wouldn't really be looking for trades to take it. Because if you look at it from the weekly perspective, it's still kind of dirty. It isn't presenting with that picture perfect setup, you know. And unlike the other JPY pairs, like USD JPY, they have better opportunities. Like the setup is better looking, you know, it's better presentable. It has more confluences such as trend lines and Fibonacci's, whereas with the Euro JPY, we only have the market structure. So I really wouldn't be focusing much on it. I'll just be watching it, you know, because you never know when an opportunity will arise. But most definitely, I believe we'll be taking trades on other pairs, but this one won't be really our main focus, not unless prices perhaps break all the way below here. Prices break all the way below here, maybe give us a retest, then we might be looking for trade. But this will be too far gone. Like, this is on the daily perspective. This is the daily time frame. So this can maybe be the next week, you know. It's very hard to get a trade down here the coming week. So it might be the next week. So, you know, it's very far away, unlike the other JPY pairs, right? So we got a GBP JPY. Look at this beauty right here. Look at this beauty. So we have prices tapping on the third touch here on this descending trend line. We have a third touch on this baby right here. Perfect touch. Like, again, look at GBP JPY. We have two confluences. We have a trend line and the market structure. With Euro JPY, we only had the market structure. So even this one is actually much more presentable than, you know, Euro JPY. So obviously with the GBP JPY here, we should be anticipating to see rejections from here, to see prices at least push all the way until this structure here as its first targets. As a matter of fact, let's try using the Fibonacci extension, if it will actually align with our zones, this being the low. Exactly, like the first take profit will be somewhere here, second take profit should be somewhere here on this rejection down here, right? Second take profit should be somewhere here. So you can see the way the second take profit aligns with this market structure back here, right? So this market structure back here aligns with the second take profit. This was a very sensitive area. That's why I just zoomed out. So the Fibonacci extension, by the way, guys, it's a very great tool for you to use if you're trying to look to understand where the markets are most likely to extend to, right? So obviously, this will be the first targets, as I said. And then from there, the market will have extended too much. Obviously, I'll be anticipating to see a retracement, perhaps on this trend line or this market structure here, before we actually see an extension for prices to push all the way down there. So with GBP JPY, that's what I'll be anticipating for this coming week. And yeah, because obviously we understand that the JPYX will be rising, so this has a greater potential of it, you know, falling. Inversely correlated, you know. You gotta know the correlations between the pairs and their indices. It will help you a lot in the long run. So we got CAD JPY. Look at this one too. This one is also inversely correlated to to the JPYX. It also has two confluences. We have the Fibonacci and the market structure. Prices tapped on this 0.38 Fibonacci key level. The structure right now was bullish all the way until here. Like, once prices were back here, we had it in a bullish run. We had it in a bullish run, right? And then prices broke below that, created a new low after this low, indicating the trend being very bearish. And you can see the momentum that it came with. It was a very strong bearish momentum. Like, it just broke through all these market structures with no retracements. What, all the way until down here, and then it just retraced right now. So obviously, and we understand that if the market is strong, retracements will most likely happen to 0.38 because the trend is still very hot, right? So we should be anticipating to see here, looking for selling opportunities to continue all the way until down here. So as I told you again, with the JPY, we have so many opportunities this coming week. This is over a 900 pip move. Crazy, man. 900 pips. Insane. So JPYX, those are the pairs. Mostly we'll be focusing on CAD JPY and GBP JPY. Euro JPY, I really wouldn't focus on it. So we'll be focusing on CAD JPY, as I said, and GBP JPY, right? I really wouldn't be focusing on Euro JPY because of it doesn't have more confluences, it only has one. And the other reason I wouldn't be focusing on CHF JPY is because you can see here, this pair has too many rejections up here, right? So I really wouldn't be focusing on these two because it also has one confluence. It only has one structure of the trend line. USD JPY, I'll also be focusing on it. USD JPY, I'll also be focusing on it because it has two confluences, the Fibonacci and the market structure. So we'll be focusing on USD JPY, CAD JPY, and GBP JPY. Trading opportunities, we'll be looking for sales in that one, right? Cool. So let's look at DXY. DXY, the US dollar currency index. Look at that thing, man. Look at that thing. This thing right here runs the world, yo. The US dollar. Insane, yeah? All right, cool. Let's get to it. This is from the weekly perspective, obviously. We can see the structure was bullish all the way until up here. And then this was the most recent low. Prices after hitting up here, rejected, broke below this low, creating a new low, a lower low, right? So that means the trend has now turned bearish, obviously. So we see prices here, after they pushed up, they hit this market structure and last week closed with an inside candle, right? So with this, we need to anticipate to see prices kind of retracing, perhaps until here as the first targets. And then if the bearish momentum will still be hot, then we'll look to see prices continuation selling. But if they don't break below this structure, then we have to anticipate to see that move. So it has to be something like this. Prices may come here and retreat and bounce and keep on going higher. Or this right here. So this is what I'm anticipating with the US dollar. But I understand that right now prices have a very high probability of pushing all the way until here. So this is from the weekly perspective, by the way. So you have to understand like these are a lot of pips. So let's look at the US dollar pairs and see if they are aligning with our bias here. We have this as the USD CHF, first pair in our watch list. We see that prices here created some kind of a double top. We had this, the first top, this is the second top. This is the neckline, obviously, and prices just broke below that. The double top, prices have broken below that and retested the neckline. So what we should be anticipating from here, for those that understand trading double tops, break of a neckline retest, what do you anticipate? Obviously, a continuation. So with the USD CHF, this is what I'll be anticipating. I'll be anticipating to see prices push lower until somewhere down here. And then after that, we'll see how the momentum once it lands here, because I believe once prices land here, prices will have also landed on the structure, on the DXY, on this structure right here. So then this will actually determine, will prices keep on going lower or will prices take off, right? It was right here. By the way, rest in peace to Takeoff, man. I miss that guy. He was the coolest one in Migos. Crazy world we're living in. So, as I said, once prices reach here, we'll actually understand if prices will keep on dipping or if they'll take off, right? So yeah, this is what I'm anticipating on USD CHF. Obviously, prices have to push all the way until down here, as the structure indicates. We have two confluences on this. We have two confluences on this, so it's actually a decent trade. It's actually a decent trade. So we'll be watching it closely, right? We'll be watching it closely. We got USD JPY. Also, this aligns with the US dollar. If the US dollar is going to dip, this one will also dip. Obviously, we'll be anticipating to look how prices will actually push all the way until here. Now, I love this one better than other pairs that we're watching, because with this one, it has two confluences or two indices that are actually indicating the same thing. So the JPYX is indicating it's going to be buying, right? JPYX is indicating it's going to be a bullish week, and the US dollar is indicating it's going to be a bearish week. which both of them align with what we're anticipating or what we're watching here, right? Because if the US dollar falls, this will also fall. If the JPYX rises, this will also fall. So this is a double confluences from the pairs and still a double confluences from the technicals. So this is a very good pair that we'll be watching very, very closely, looking for trading opportunities in this coming week, right? So cool. We got, I skipped Euro USD. We got Euro USD, Euro USD Denga. Yeah. All right. So this is from the weekly perspective. Now, with the Euro USD, I wouldn't be focusing much on it because look at its structure, right? Like for instance, with the other US dollar pairs, we see that prices have already retraced to about the 0.38 Fibonacci. This one hasn't hit that yet. It hasn't hit that. And then it closed with an inside candle. So I was like, okay, cool. You closed with an inside candle, but mid-air, right? As a trader, you need to understand that you need to take trading opportunities once they're on the right spot, once they're on the right market structure. You don't just take trades anywhere. You have to wait for prices until they're on a significant market structure. That's when you take the trade. But other than that, you're just gambling, man. You're just gambling. So you can see with the Euro USD, the reason I don't really like the setup. Down here, it didn't really touch the 0.38. Like prices didn't really reach there. If I force it all the way until here on this previous, I was going close instead of zooming in. So if we do try to force it to cover this previous week or previous turning point right here, that's where it taps, right? That's where it taps. That's where it taps. But I don't really like it because, again, I like looking at the market structures from the most recent turning points. So this may be all well and good, but I'm not really going to be focusing on it because I have better trades. I have better trades to take. And why would I waste my time on a trade that, I'm half in? So obviously the bias is bullish. The bias is bullish. Obviously, I'll be anticipating and looking at it until prices perhaps reach here. And then we can actually understand if prices will keep on going higher or if they'll just retrace and keep on going lower, right? But my bias is I think prices will push lower. Because if you look at it from the higher perspective, like from the daily, monthly, excuse me. If you look at it from the monthly, this is what's up. Look at this thing, man. Prices broke below this structure, this trend line. Like this is an A1 setup. And then last month, prices closed with a solid bearish momentum, right? So this indicates that the bears have they have still a very big opportunity to keep on going short. So whatever we are trading right now is just a short-term trade. That's my bias. That's what I believe. I believe this is just a short-term trade. So if prices push all the way until they reach here, obviously I'll be anticipating or looking for selling opportunities to, break more structures below. It just looks like prices didn't have that strong of a bearish momentum here, right? So I'll be anticipating once prices reach here to give us a confirmation to, sell and go all the way low. All right, Euro USD. We got GU. With GU, same applies. Prices are still in this bearish mode. If we look at it from the monthly perspective, like they just broke below this structure here. They just broke below this structure, broke, retest. And last month was a bearish engulfing. So we still have that bearish momentum in it, right? And we still have that bearish momentum. But if we look at it from the daily perspective, we see that the momentum isn't strong enough to break this structure. So obviously, prices will have to go back up to look for more bearish momentum on this resistance structure. So we should be anticipating to see prices do this kind of thing before it keeps on going lower. So this, we'll be looking for this kind of move right here. We'll be looking for this trade. But mind you, what we'll be trading here is just a short-term trade. Our long-term trade is sell on this thing. But currently, we have to eat, We got to put food on the table. So we can't just let the market go by. We're just going to be looking for a quick trade, swing with it until somewhere here, obviously after they break this structure. And then from there, we're going to be looking for more sells, right? GU. With gold, we're already in a trade that we took, I think it was on Thursday. Yeah, it was on Thursday. We took a trade. Right now we are floating at over 179 pips, almost 1,800. What am I talking? Over 180 pips. So I remember this while we are looking. For those that attended the Friday webinar, you must have gotten this trade right here. You must have gotten this trade. Because I remember while we were having the webinar, I told you guys prices just broke above this structure, but they clearly broke above this right here. So we'll be waiting for a retest before we take a continuation, right? So for those that were on the webinar and followed on gold, you should have taken this trade right here. I wouldn't understand what if you didn't take this trade. It was a beautiful trade. So if you took the trade, you were probably floating at around 75 pips. So it's not bad. It's not bad. 75 pips. It's something, right? So for us that took the trade all the way down here, obviously we're still floating at about 1,800, and I'll be anticipating to see prices keep on pushing higher until our targets are hit. We haven't closed any partials so far. The momentum is still very strong, so I'll be anticipating to see prices swing all the way until they hit our target right there. Cool. So gold, we are break even, risk free. We all right. Aussie USD, this is the last US dollar pair. If we look at it from a weekly perspective, look at this thing. We have a left shoulder, head, and right shoulder. Like it's clear as day. It's clear as day. So obviously what we should be anticipating right now is for prices to start the move from here, push all the way until there. Obviously, once prices reach here, they'll have also reached on the DXY. On the DXY, prices will also be on the support. So we'll see how prices will react from that. But this is the first move that we're looking for. Once prices break above that, then we'll be trading the head and shoulders pattern. But right now, we'll just be trading the right shoulder, right? So we should be looking for buys from here until prices tap there. And that will be our trade for the week, right? So guys, those are the trades that I'm looking for to be trading in this coming week. Yeah, it's gonna be a great week. I can feel it. I can feel it. So thank you for your time, man. Thank you for your time. Thank you for showing up. Perhaps maybe if someone has a pair that you'd like me to talk about, now will be your time.